Morning, everyone. Thank you very much for attending our annual Academy Schools update. Just to introduce myself for anybody who doesn't know me, I'm Louise Bridget, Director for the not-for-profit sector and Education Specialist. Just a little bit of admin before we start. So just to mention that the session is being recorded and will be sent out afterwards to everybody. And we will be taking questions in the Q&A section of the webinar. We'll go through them at the end. I think that's just a tidier way of doing things, to go through them at the end. The questions will all be anonymous, so please ask away and we will deal with those as we get to them. So just a quick run through the agenda. So this morning you've got Darren Perry presenting an update on this year's Academies Accounts Direction. Then you've got me presenting the update for the Academy Trust Handbook. And then we've got Stephanie Henshaw, one of our audit and assurance partners, talking to you about risk registers and a practical session around some of the things to think about there. And then we've also got Phil Osgathorpe, Director, with a cyber update for you. And there, as you can see on the agenda, we have the Q&A at the end. So without any further ado, I'll pass you over to Darren for our Academy's Accounts Direction update. Thanks, Darren.
Thanks, Louise. Good morning, everyone. For those of you that don't know me, I'm Darren Perry. I'm a director in our Truro office, looking after our Academy and not-for-profit clients. And as Louise mentioned, I'm going to kick off today's webinar with a review of the changes in the Academy Accounts Direction, which is obviously the guidance that is there to assist Academy trusts with their accounts for the year ended 31 August 2024. So to start with the good news, there are no real changes of significance to the requirements this year. So hopefully most things can be fairly consistent. But in terms of the guidance, the ESFA have included additional clarifications on certain points and guidance on how to interpret the requirements, which I'm going to go through later. And then they've also given further feedback on non-compliance examples that they've seen based on their assurance work. I've put the link up on the screen for obtaining all the documents, but obviously it's also straightforward to get them through Google, but do just make sure you pick up the right year for that you're looking at. So if we start really with just a run through of the feedback that the ESFA have given, like I mentioned, this is coming out of their compliance work and reviewing Academy accounts, audit completion reports, and so on. So just to run through the issues that they do see on some clients. Firstly, they've raised the point that submission deadlines are not always being achieved, and that in some instances, that is solely due to the fact that perhaps the relevant trustees or accounting officers aren't available to sign off the accounts or the documentation at the right time. So just making the point that it's good for Academy Trust to make sure that they do forward plan to ensure, you know, the relevant staff or accounting officer will be available at the end, and that fits in with board meeting dates and so on. They've also flagged again in respect of the trustees report narrative and the governance statement that quite often that they see that is not correctly reflecting the actual circumstances at the trust, and that's a point that they've probably raised over the last few years as well. That's often because the narrative perhaps either hasn't been reviewed or updated for the year, or that there's been a bit too much reliance on copying the pro forma text without tailoring it to the Academy's circumstances. So it is worth, again, building in time to make sure you have a really good review of your trustees report and governance statement narrative, and check, you know, that the two are consistent. So if you're talking about, you know, the frequency of your internal audit visits in the trustees report, make sure that ties up to what you say in the governance report and so on. They also raise some concerns that in some cases the internal scrutiny arrangements are weak, and that tends to be the case where the internal scrutineer has largely just been told to get on and do some internal audit work without giving them a very clear plan of what areas the audit committee or the trustees want them to review. So they're just making the point again there that when it comes to your internal scrutiny, that should really be, you know, agreed by the board and the audit committee, and then discussed with the internal scrutineer about what you're going to cover, and to make sure that that plan is informed by your risk register and the risks that you see facing the trust. Okay. They've also flagged that they see that quite often high-level recommendations from the auditors are not necessarily being dealt with from year to year and are simply carried forward. Obviously, that can result in weaknesses in internal controls, and it's very important that the audit committee does ensure that all such points are considered and actioned on a timely basis. And one of the questions you have to fill out on the annual accounts return that's filed in January at the end of the year is whether any high risk recommendations haven't been actioned from the year before. So it does flag it with the ESFA, so definitely keep an eye on those. And they've also made the point that ultimately it is a requirement that you do comply with the accounts direction and the model accounts, and that basically means that all of the required statements and disclosures are included in your year-end accounts. So for example, last year where there were some narrative changes around references to estate management, for example, not all academies pull those narrative through to their accounts. And again, that's just another point to look out for. And we do have one additional piece of narrative this year, which I'll touch on in a minute. So in terms of the clarifications in this year's accounts direction and what's changed, well, first of all, there is a new section just covering off what the Academy Trust must do in respect of preparing the year-end accounts, complying with the audit requirements, and then making sure they're submitted to the ESFA by the 31st of December, on the Academy Trust's own website by the 31st of January, filed with Companies House by the 31st of May, and then also being provided to every member of the Trust. There's a bit more narrative this year, just explaining a bit more about the reporting requirements in the accounts and why they differ to the information that is sometimes requested in the accounts return. And that's purely because the annual accounts return information is used to produce the sector annual report, which uses a different accounting framework. So they're just giving a bit of background on that. And then you will recall from a few years ago that the ESFA published a supplementary bulletin in respect of COVID-19 matters. In the accounts direction this year, all references to that bulletin have now been removed, purely because those COVID grants obviously aren't being received anymore or have become part of business as usual. So they've taken out those comments. Now, I did mention that there is one additional piece of narrative in the accounts this year, and that's in the governance statement section. And you are now required to specifically conclude on your review of the effectiveness of internal controls at the trust. So the standard conclusion that you need to include if you're happy with what's in place is up on the slide, but based on the advice of the Audit and Risk Committee and the Accounting Officer, the Board of Trustees is of the opinion that the Academy Trust has an adequate and effective framework for governance, risk management and control. If you're not in a position to say that as a Board of Trustees, then you need to highlight that and go on to give your reasons for that conclusion and what your plan for improvement is. So that's just one additional piece of narrative to watch out for this year. What the ESFA have also done is put in a list of sources to inform the accounting officer's statement on regularity, propriety and compliance. So that's the personal statement that the accounting officer needs to give this year. And as you can see on the screen, they've given a list of bullet points of the sort of things that the accounting officer ought to be thinking about before they sign off their statement to say everything is in order. So, you can see there, that's things like, reviewing minutes of meetings, looking at all of the musts that are set out in the Academy Trust Handbook, looking at the Academy Trust scheme of delegation. Has that scheme of delegation been complied with? What are the outcomes of any external assurance that the Academy has had, whether that's from the external auditor or the internal auditor? And then also consideration of other matters related to related party transactions. So for example, consideration of whether there's been any personal benefits from the Academy Trust transactions by any staff or connected individuals. So it's just given a bit more guidance on the sort of things that the accounting officer needs to think about before they sign off their statement in the accounts. The accounts direction has also clarified some of the other disclosure notes in the accounts. So firstly, they've just made the point that core 16 to 19 funding is not part of GAG, and therefore, in line with any other DFE or ESFA grant received, if it's material to the accounts in its own right, then it should be disclosed separately in the income breakdown in the notes to the accounts, and that applies to other ESFA grants as well. They've also gone on to clarify that the staff cost note should include a line for other employee benefits where there are any. So that's not going to be things like your normal wages and pensions, but they're talking about any sort of non-monetary benefits that might be provided to staff, and perhaps medical care or medical insurance, accommodation, and so on. I'm not sure we're going to see a great deal of that, but that does need to be split out now in the staff cost note. And whilst I think most academies were already doing this, in the agency arrangements note, there is a point that you've got to also disclose the cumulative unspent fund balances in addition to any amounts that you've received in the year, dispersed in the year, along with comparative information for the prior year too. And then finally, in terms of the clarifications, land and buildings guidance has been tweaked again. So they have added a few more points around how you assess the value of any leasehold land and buildings that are transferring to the Academy Trust. So for example, either on conversion or on a transfer. And so they've included a bullet point that you might wish to consider assessing the value of any assets from a transferring Academy Trust. But they've also put in the point in respect of valuation certificates provided by the DFE. They've added a comment this year that those valuations are primarily prepared for the purposes of assessing the value of the whole national school estate, and so they may not necessarily be accurate at a local level. So there is a bit of a steer there that they are really best used for comparative purposes than to base your actual initial transfer on. So just a little bit more guidance there around what trustees should be looking at. And then just a final reminder really that along with the Academy accounts direction, we have got the separate Coketown model accounts. So that's a full example set of accounts to help you ensure that you pick up all the necessary disclosures. There is also a framework and guide for external auditors and reporting accountants that they publish each year. And whilst that is aimed at external accountants, it may be of interest to trustees or accounting officers that want to perhaps understand the requirements, roles or responsibilities of the auditors. And we are expecting again that the guidance about submitting the financial statements will be updated in due course. It's not available yet, but we are expecting you to continue to need to submit your financial statements, a cover sheet, the management letter from your auditors, and the internal scrutiny report for the year in due course within the existing deadline of the 31st of December. And in terms of the annual accounts return, they've confirmed that the submission date for that will be the 28th of January 2025, and that it's expected that the online version of the accounts return that can be completed should go live from or by the 5th of November at the latest. Okay, and then just one final point really. You'll remember that obviously academies are part of the local government pension scheme for support staff. So each year you'll get from your actuary a report setting out the academy shares of the assets and liabilities of the local government pension scheme. And I think we saw last year for the first time that with changes in the discount rate, some academies found themselves in a surplus position on the local government pension scheme. However, under accounting standards, whilst in the past we would have recognised the full deficit in the pension scheme in the accounts. When it comes to a surplus, the accounting standards only let you recognise a surplus up to the extent that it can be recovered either through a refund or through a reduction in contributions. So where academies were in surplus last year, asset ceiling reports were obtained from the actuaries, and I think in most circumstances last year, it was indicated that because the actual contributions they'd have to make were still higher than the future service cost, there was no indication that any surplus would be recoverable, and therefore any surpluses were typically capped at nil in the statutory accounts. We're not expecting a great deal to have changed in terms of the discount rate assumptions this year, so it is quite likely that some academies will find themselves in a similar position. And if that does apply to your trust, then it would be good to again get the asset ceiling report from your actuary just to support the accounts disclosures. Depending on what local authority you're in, you may need to specifically request that additional report. Now, like I said, that is all that there really is on the accounts direction this year, so quite a quiet year in terms of changes. And I'm now going to pass you on to Louise to talk about the changes in the trust handbook.
Thank you, Darren. That was really useful. And hello again, everybody. I've already introduced myself, and also just to say this session was actually going to be presented by Ollie Durbin, one of our senior managers in our not-for-profit department, but he's actually with his wife. Their baby is due any minute, so he's got a very valid excuse not for being here. So I'm picking up the presentation of this session kind of because Ollie can't be here, so please bear with me, but I'm sure we'll be fine. Okay, so in this session, I just want to talk through some of the new elements in the recently published 2024 Academy Trust Handbook. But before I do that, I thought it would be useful to remind you that there's a new governance guide, and that one was released in March. It's a non-statutory document for those charged with governance, and it's a useful source for trustees and executive leaders when they're thinking about their responsibilities and strategic planning. And as you would expect, it doesn't contradict anything in the handbook. It supports basically what's in the handbook. There shouldn't be anything new in the document, but the contents have been split out to make it easier to use. And some of the guidance which was separate has now been amalgamated. For example, that includes things such as an appendix of statutory policies and the documents which the board must have. I just wanted to signpost that in case anyone's still referring to the 2009 edition. Okay, so moving on to the handbook itself. So you'll recall that the delay of publication of the handbook was until after the general election. So it hasn't actually given trusts much time to implement things in time for September. Having said that, reassuringly, there haven't been any sweeping changes, but we'll take a look at what has changed and what's been clarified in this edition. So just a quick reminder that the effective date for this edition of the handbook is the 1st of September 24, meaning it is already in place, and it should be what you're currently referring to within your trusts. Just a quick reminder as well for trusts on the webinar, as well as auditors, that the regularity audit that takes place on the accounts to the 31st of August 2024 will actually be referring to the 23 handbook, because that's the one that would have been in effect for the whole of last year. So we always have this slight confusion where we've got the new one being implemented in the changes, but actually we also still need to look back to the previous one in terms of the regularity work. So the new handbook is again shorter and snappier with improved signposting to other reference materials. And we find that that's particularly helpful if you use the online version of the handbook rather than a printed one. So I'd certainly encourage you to use the online version where you can. The direction of travel is for the handbook to become even more streamlined over time, really just to reflect the maturity of the sector, the expertise of the personnel within the sector. We've come a long way since the early days of academisation. And so there'll be more and more signposting within the Academy Trust Handbook rather than the actual thing getting larger and larger and more complex itself. So one of the key areas of change which have been in the pipeline before the handbook was published is the changes in clarity around finance leases, and I'll come on to that shortly. But I think just in general, it's useful to note that there is a willingness amongst those developing the handbook, and I include myself in that number, to make it as user-friendly as possible. So where you are asked for feedback at all, or what you think, or anything that could be improved, please do engage with that, because we are continually looking to improve it and want to make it as user-friendly as we can. And also just a plea for you to just anyone that is within your trust who has responsibility for governance or management, please make sure they've received a new copy and please do what you can to make sure they read it. Okay, so what's new this year or what has changed? Well, I think the first change there speaks for itself, not overly exciting, but just wanted to flag it. So in order to give it more prominence, the Register of Business Interest section has moved from the Delegated Authorities section to closer to the top of the handbook, and it explains what details the register must contain. Secondly, the handbook now explicitly refers to the DfE's set of digital and technology standards. So this guidance was first published in 2022, but there's now explicit reference to it within the handbook. And this is a reminder that academies must make informed decisions about technology, leading to safer and more cost-efficient practices. So these digital and technology standards are to be used by everyone involved in the planning and use of technology within the schools and college sector, including senior leadership teams, IT staff, and suppliers. And the standards can help you with budgeting for technology procurement and maintenance, as well as when you're actually buying technology equipment and services. So please refer to them where applicable. So going on to the main financial requirements. So in relation to reserves, there's greater emphasis in the new handbook on the fact that the board should consider many things, including ensuring that financial plans are prepared and monitored, and that the board is satisfied itself that the trust remains a going concern and is financially sustainable. And I know that that's going to be something that becomes more and more of a factor with budget challenges, etc., that you're all facing. You need to take a longer term view of the trust financial plans, and these need to be consistent with the requirement to submit 3-year budget forecasts to the ESFA. You need to set a policy for holding reserves and explain that policy in the annual report, including a clear plan for managing your reserves. So there's a signpost within the handbook to the Reserves Good Practice Guidance, and the link is also there on the slide, so please have a look at that. So probably the most exciting development this year is around EV salary sacrifice scheme. So we have to get our excitement where we can with these things. So I think this is probably the big news. So if you were to read what has changed in this handbook, sort of at the front of the handbook, it's got a short summary there of what has changed. This comes across as simply a clarification. However, I actually think it's more of a complete U-turn. So the previous handbook stated that an EV salary sacrifice scheme did not need ESFA approval, where there was no liability falling to the employer if the employee did not fulfil their statutory obligations. However, the 2024 handbook has done a U-turn on this, and now actually approval must be obtained when considering any new schemes or any existing employees any new employees onto an existing scheme. So where you've got a new scheme that you're thinking about, or where you're adding people to an existing scheme, you do need to get approval. And I think it would be quite easy to miss that within the handbook unless you actually got into the detail, which is one of the reasons I wanted to flag it here. Just to support that, you may recall the Dear Accounting Officer letter, which came out on the 31st of July this year, where that change was highlighted, as well as the other main changes or clarifications from the handbook. So you might want to dig that letter out just to remind yourselves of the key things that changed there. Couple of clarification points around internal scrutiny. So the new handbook clarifies that trusts with annual revenue over 50 million must use a professional internal audit function from the 1st of September 25. So you've got 12 months notice on that. If you're one of the larger trusts, you will need to have a professional internal audit function from the beginning of next academic year. Where your revenue is below 50 million and the work is being performed by a non-employed trustee, or perhaps a peer review, a CFO from another trust, for example, trustees must satisfy themselves and must document that these people do hold suitable qualifications and have suitable experience. So you'll need to do a board minute or have some kind of record of the work you've done to satisfy yourself on that point. And again, that will be from the 1st of September 25. Delegated authorities. So the DfE published some guidance back on the 28th of March, setting out some greater flexibility for trusts to enable them to enter into finance leases in certain circumstances without needing to get consent from the Secretary of State. So you'll recall it's always been a previous no, absolutely no finance leases, but that has actually been relaxed slightly. The approved list includes such things as IT equipment, telephony, catering and cleaning equipment, furniture, groundskeeping equipment, gym equipment, as well as other items. And you'll be able to find the approved list online. Any leased assets not included in the list will still need to be submitted to the Secretary of State for Education for consent. And these may also include things such as land and buildings leases that won't be on that list. Any leases entered into before September 2024 for items that appear on the new list are also automatically approved. So you don't need to go back retrospectively. This is to bring academies in line with the maintained schools which have adopted IFRS 16. For academies, you will still need to distinguish between operating and finance leases in terms of accounting. So please keep the records separate, make sure you can distinguish what's going on. I think it's important just to say that despite this new freedom, trusts need to take care that actually what they're doing is best value for money before making any leasing decisions. So for example, a hire purchase agreement might still be a more cost-effective option, even if you're purchasing one of the items on the approved list. And just because you don't need approval, it doesn't necessarily mean that's the right way to go. You may feel that best value can be gained elsewhere. So it's really the whole picture, but hopefully that does make it slightly easier for you. Just as mentioned at the start of the session, the handbook now explicitly refers to DfE's set of digital and technology standards. And there's also a set of cybersecurity standards that trusts must comply with. Trusts have an obligation to meet the cyber standards and they're signposted in the handbook. So whereas previously handbooks have just talked about taking proportionate action in relation to cybercrime without really any clear explanation of what was meant, you've now got much more clarity. I think the sector could probably still go a long way, and Phil in his session will probably talk to you about some of the things that you should be considering and what you can do as a response. But I think this certainly is a step in the right direction. Just in terms of regulation, so with the ever-increasing focus on estates and estate safety, it's unsurprising that an additional notice to improve category has also been added. And this relates to governance when trustees and management fail to maintain their estate in a safe manner. So really that's talking about failure to maintain your estates within a safe working condition. I hope you found that quick run through useful, and I hope you're reassured that there hasn't been a huge amount of change. As I said, the biggest changes are really in relation to finance leases and the exciting EV scheme U-turn. Just to mention here, the schedule of musts within the handbook, it's there every year. Most of you, if not all, probably use it already, but I think it's a really useful checklist. If you haven't looked at it for a while, or if you know there's people within your trust that haven't looked at it for a while, it's a good one-stop shop. Page 7 of the handbook also has some other reference and resource material, and that includes some of the resources there on the slide, so please go to that. But if you ever have any queries, as always, you know, we would say please just speak to us, speak to your audit team, and we're always there to help you. So I'm now going to pass you over to Stephanie, who's going to talk to you about risk registers. Thank you.
Thank you, Louise. Well, good morning, everybody. Those of you who don't know me, I'm Stephanie Henshaw. I am an audit partner. In fact, I'm the firm's head of audit and assurance. But part of my day-to-day client work is around risk and governance. And in fact, I do sit on the board of a regulated entity, not an educational one as it happens, where risk registers are a very important part of day-to-day management by the board. So in this session, I'm going to talk about some practical tips on risk registers. What does good look like? And how do you know if your risk management system actually works? So why think about risk? Well, who remembers going back 37 years to this rather famous scene where Michael Fish, live on television, said somebody had rung up the BBC and said she'd heard there was a hurricane on the way. Well, if you're watching, don't worry, there isn't. We all know, or at least those of us who were around at the time will know how that ended. And for those of you who are too young, there were hundreds of thousands left without power, 18 people were dead, and it was the worst storm since 1703. What went wrong? Was it a failure of imagination or a failure of analysis? This is why we need to think about risk. And the Academy Trust Handbook sets out the headline requirements for risk management, for oversight of risk, and for the requirements to maintain actively your risk register. So risks to what? Well, for an academy, it would be the risk to you being able to deliver your objectives as an academy. But it's also risks to the people involved, whether that's the pupils, the staff, or other stakeholders. It could be a risk of you breaching your funding agreement and therefore not actually having the funding available to continue. And Louise referenced just now, very important aspect of risk, which is around estate management and safety and making sure you're actually keeping your estate in good order. Now, in terms of managing a risk register, broadly, you can divide those things into 5 headings. So we have operational risks, which are about staffing, curriculum, premises, things like cyber attack. Governance risks, which are to do with the competence and number of your governors, the quality of your reporting, and the relationship between governors and the executive. We have financial risks around adequacy of funding, and that might include things like falling or increasing roles and the lag on funding, alternative sources of income, and also sweating your assets to get the best from them. There might be external risks, things like government policy, and with just having had a change of government, there could be quite a lot of uncertainty there. Demographics, consolidation risk, and then finally compliance risks, so things around regularity, health and safety, safeguarding, funding, and data protection. So broadly, you can kind of categorize risks under those 5 headings. And the 2 things you then need to think about are, first of all, your response to those risks. And that's fairly common. People think about that. What are we going to do about those risks? But the other area I find useful to consider is actually your appetite in relation to those risks. How much risk as a board of governors are you prepared to accept for your academy? And that's something I think is quite useful to consider. And your risk appetite might vary depending on which aspect of risk we're talking about. So you might be highly risk averse, for example, in relation to compliance risks around safeguarding. But you might be a bit more cautious, for example, when it comes to certain governance risks. You might be quite open to risk when you're looking at things like sweating your assets, but less so when you're looking at things financially, like the adequacy of your funding. So actually thinking about the appetite for risk can help to give you a better sense of where you need to deploy your resources in order to manage and mitigate risk most aggressively. Now, what does a good risk register look like? Well, the first thing I'd say is there are no prizes for having the longest risk register. The trouble with long risk registers is that they become an industry in themselves, and they actually distract you for doing what you're really there to do. Equally, there is no value in having a tiny point size to try and keep your risk register to 2 pages, if that means everybody needs a magnifying glass to be able to read it. Usually what's driving this is too many risks. So first thing I would say is, as governors, it is strategic risks you're concerned with. Operational risks should sit with the executive, and it's often good practice to actually separate those out into different risk registers, or at least different tabs on a risk register, so the governors can focus on the strategic side of things. Now, there may be some operational risks which have strategic consequences. For example, there might be a reputational risk around a safeguarding breach. So you do get some crossover between what governors and executive need to be concerned with, but there should also be some things that are very definitely devolved to one or the other. Try and keep your risk register relevant and brief. So the scale and content needs to be appropriate to your academy. Too many risks on a risk register actually is sometimes evidence that symptoms or consequences of the same risk are being identified separately. And what you really need to do is drill down and identify what the underlying risk is and work from there. Next thing to think about is scoring risks. And the reason you do that is to try and rank them in order to focus on the ones that are most important. Don't get hung up on a scoring system. There's no right answer to how to do this. The important thing is that those using the risk register understand the scoring scheme. So keep a note of what it is. Do you, for example, use 1 to 5 or 1 to 10? But also be consistent in how you apply it. So it's worth spending a little bit of time agreeing what it's going to be, committing it to paper, and then working from there. Once you've got your scoring, then the two areas you need to think about are the likelihood of each risk arising and the magnitude of its impact if it were to arise. And here you are looking at the raw score. So you're not thinking about any mitigations you might have. You're just thinking about the raw risk. What is the likelihood and what is the magnitude if it were to happen? Now, obviously, if there is a high risk of both, that is going to give you a high overall risk. And therefore, that's going to highlight something you definitely need to think about. But don't just think about the things that are high likelihood and high magnitude. Sometimes you can have things which are very unlikely, but which, if they actually were to occur, are catastrophic. And the best example of that actually is to think back to your risk register in 2019 and consider whether it included pandemic. Because pretty well every organisation with the risk register did not have that on there. So we're very much looking at, the hurricane scenario. It might be unlikely, but what would happen if it did? And therefore, what's your response to that? And that's where it brings us on to mitigations. Broadly, there are 4 categories of mitigation. You can tolerate a risk. So if it's something fairly low level, you may say, well, we can live with that. And this is where your risk appetite comes in again. Treat it, which is, well, we need to put some controls or some actions in place to address that risk. You can transfer it somewhere else. And you might do that by outsourcing. You might do it by insurance. Or you can terminate, which is stop doing the thing that is giving rise to the risk. So broadly, your responses are going to fall into one of those 4 headings. But the objective here is to think about the cost benefit payoff. You don't have unlimited resources, either financially in terms of people. So where do you need to spend your time? And that's the whole point of scoring your risks and thinking about your mitigations. Once you've got your score, you can look at your residual score and compare it with a desired score. Where do you actually want to get to? That's where, again, the risk appetite comes in. Have you brought the risk down low enough that it meets your risk appetite? So what does a good risk register look like? Let's just take a quick example. Let's say your governance risk is not being able to attract governors with appropriate skills. What might your mitigations be? Well, they might include having a succession plan, which may include a timetable of when governors are due to stand down, and how you're going to work the process of bringing new people on board. That might include a skills audit to look at your existing board skills and those you need so that you can identify the gaps. That in turn may feed into your recruitment process. Who are you looking to recruit? Where are you going to get them from? Is that a formal or an informal recruitment process? But you might also think about, once you've recruited those people, how do you induct them as governors? And how do you maintain your governors' competence once they're in post with ongoing training and development? So all of those things could be part of your mitigation process. Really importantly, who is the owner of that risk, and therefore who is going to be responsible for overseeing those risks? And in some boards, the answer there is, well, actually, there's a sort of nominations committee who takes responsibility for succession planning and skills reviews and recruitment and training. And therefore, you've got a little cohort of people who will then run that on behalf of the board as a whole. In terms of maintaining and using your risk register, again, you don't want it to take over. The objective actually is to run a successful academy. So this is a tool for doing so. But useful things to think about, visual cues and keys to help people identify quickly which are the problem areas. So RAG rating your risks, and just think about, which scores would fall into red or amber or green. Tracking the movement in your risk scores. Is the risk steady? Is it going up, or is it coming down over time? And then review your risk register regularly, maybe quarterly. Doesn't necessarily have to be at every single meeting. If you do it too frequently, it can get in the way of other business, and actually you don't have enough time to see risks developing. So you need to think about how often you do it and what sort of review that's going to be. And that might be a high level review for 3/4 of the year, and then a detailed review once a year. It is helpful to look at risks that remain high over a period of time. So if something is stubbornly at a high level, does that mean you need to look again at your mitigations to see if you could bring that risk down, especially if it's still out of line with the risk appetite? If risks are no longer considered to be strategic, then take them off the register. Some boards like to have a retired risks tab where they capture the risks that they don't think are a problem any longer, something that's gone away, almost as a way of allowing them to refer back to it maybe once a year and go, is there anything on there we should be resurfacing? Good practice, when you get to the end of a board meeting, just consider whether anything's come up which perhaps ought to be reflected on your risk register. Don't deal with the risk register at that point. Save the conversation for when you next have the risk register tabled, but at least capture the fact that you've identified something that may be impacting on your risk assessment. And very importantly, it's the governor's responsibility to have overall ownership of the risk register. There is a risk that you can over-rely on a very helpful and committed executive, but the governors have got to take responsibility for understanding the risk environment that the Academy operates in and being satisfied that that's being dealt with. Again, in terms of maintaining and using your risk register, this is not something that sits in isolation. It needs to link right the way through, including to your financial statements. So think about the governance statement that you put on your annual financial statements. How does your risk register sit with the principal risks and uncertainties you talk about? And how does it sit with your reserves policy? Now, Louise was referring to this earlier, the importance of having a reserves policy. Well, your need for reserves, your reserves policy is about your need for reserves, the level of reserves you maintain. And that means thinking about the ones that are unrestricted as well as the ones that are restricted, because there may be things that you cannot do with your restricted reserves, but which relate to live risks to your academy. So actually understanding how your risk register then manifests in terms of how you manage your reserves and what reserves you need is actually quite important. And again, that comes back to your risk appetite and your appetite, not just in overall terms, but for specific types of risk. Can be quite helpful actually to plot your risks on a heat map. So green through yellow and amber and up to red, just as a way of identifying, are our risks all clustering in that top right hand corner, or actually are they tending to sit in the bottom left hand corner? Does that mean we're not being ambitious enough as an academy if they're all in the bottom left hand corner? Does that mean we're actually stifling some of our activity because we're managing risks too tightly? A bit of risk is a good thing in an organisation, but you need to be managing it carefully. Finally, how can the board check the risk mitigations are working? What are your sources of assurance? Now, some of that will come through management reports from KPIs and dashboards produced by the executive. Some of it will come from comparing the year-end accounts and the adjustments between there and the management information, financial information you've been provided with during the year. Because if your auditors are making lots of corrections at the end of the year, that's actually telling you that there are things perhaps that aren't working in your ongoing management figures. So it's actually worth looking at that and understanding the nature of the adjustments. Don't worry if the big year-end adjustment is the pension scheme. Nobody does the accounting for those on a month-by-month basis. That's entirely normal. But if you're getting a lot of corrections to where things are classified as regards reserves, for example, that might be something that needs a bit more thought. The audit process will give you assurance, both internal and external audits. So do look at the findings and think about what that's telling you about your controls, both financial and non-financial. And of course, there are other sources of certification, Ofsted being an obvious one, but for example, cyber certification, and Phil's going to talk about cyber in a moment. Some deep dives, asking searching questions, governor interaction with staff outside the senior leadership team can be quite useful. Triangulate different sources of evidence. Look at apparent inconsistencies between the things you're being told. Think about the independence of each assurance source. If all your evidence is entirely being generated internally and it all tells you the same thing, that might be positive, but actually having something independent which tests that out is also important. And just coming back to that question of your reserves policy, it can be quite helpful to stress test the combination of risks and the impact of them financially. If our big ticket risks all hit at once, what would that mean in financial terms and how would we manage that? You might find it useful to have an assurance map, and there is one available on the ICAW, that's the Institute of Chartered Accountants in England and Wales website. So there is a link there on the slides where you can find that. And just finally, some examples how the board can check risk mitigations are working. Data breach risks. You could look at reports to the ICO. You could look at your training records to see people are complying. You could have a look at the service level agreement with your outsourced IT provider. You might look at reports of downtime on your systems. And again, maybe your cyber certification can feature in there. Funding risk, well, that's going to be your financial KPIs, your spend against specific funds. I've mentioned year-end adjustments, but you might also triangulate with your non-financial KPIs, demographic and role data, and also do some sector and governmental horizon scanning to look for things that might be a threat. And then finally, there you can see some suggestions around safeguarding. I guess to sum up, what I'd say is you want your risks to be proportionate, to be strategically focused, to be actively maintained. You want assurance over the operation of your risk management. Use it to inform your reserves policies. So those would be my sort of 5 key points. I hope that's been useful, and I'm going to hand over to Phil.
Thank you very much, Stephanie, and a very informative session as always. So coming on to cyber, and wanting to talk a little bit about the sort of the landscape more generally before going into the education sector, and giving a little bit of a brief background about me. I'm a director here. I lead our cybersecurity services and also our IT assurance services. I also have an independent role on a board for a private company in the public sector. So looking at the general overview and sort of cyber landscape, now the 3 most common forms of cyber threats are things that have been probably the most common for a number of years now: malware, phishing, ransomware. I think we're all getting more familiar with its terminology. And I think it's usually the reality that those 3 are a bit of a combination when organizations are being targeted. The most common format being phishing, so someone's accessing individuals' credentials, so that could be a user login and password, and then they use that as a means of exploiting the organization for some form of malware or ransomware situation. Now, I think something that's really interesting is that ransomware is evolving insofar as that cyber criminals would lock organizations out of their data, out of their systems, and generally try to stop organizations operating and therefore holding them to ransom before they could get their systems back up online again. Now, organizations became aware of that, started to take backups and actually get better at restoring their data and their systems. However, cyber criminals have therefore pivoted in actually realizing and reacting to the fact that, okay, organizations can bring their systems back up again, but actually we've got all this data and this data has value. So now we're going to actually hold organizations to ransom because now we could leak this data unless we receive a payment. So we're seeing actually a transition of the type of cyber crime that's happening. And if you look at the value of cybercrime and the expectation by 2025 is that it's going to be something like 10+ trillion, which is greater than the GDP of a fair few countries. Looking at the third bullet point there, we've got sort of the leading impersonated organizations: Microsoft, Google, Facebook, Apple. If I think of just about any person I know and any organization I've ever worked with, they all use at least one, if not more, of those vendors. And what that says to me is that makes it incredibly easy to target individuals and organizations by impersonating those vendors, to therefore dupe people into clicking on links or installing some form of software, or actually that particular product being vulnerable for one reason or another. You then have obviously the advent of AI, generative AI. That's sort of an exciting, a hot topic. A lot has been talked about. I think the reality for me here is sometimes it's quite nice or quite easy to spot a phishing email because it's poorly worded, bad grammar, bad kind of pictures and fonts and things like that. With the advent of AI, actually, you could feed it a series of emails and then get it to write one for you, which is grammatically perfect and also in the style of someone's writing. So it's a lot easier to actually impersonate an individual to make the email or the communication a lot more convincing for someone to respond to it in a particular way. So I think that's also something to really be aware of. I think what we're also organizations are kind of waking up to the idea and realizing that cyber is actually a really serious threat, and that actually, if it were to happen, it affects the entire organization, not just IT. Don't get me wrong, IT are probably the individuals that are going to be helping to resolve the issue, or whether that be a third-party vendor or in-house. But actually, the organization really need to be able to take that responsibility and be able to respond to those situations and, dare I say, put in some form of protection against what could possibly happen. There's looking to be increased regulation and transparency. So if we look at the King's Speech, one of the 40 bills that were mentioned in that King's Speech was to implement additional regulation around cybersecurity, provide greater power to regulators specific to cybersecurity, and to provide greater transparency on cyber breach data. So it's looking to probably formalize a lot more sort of reporting, standards, regulation, and regulator power around cybersecurity, which obviously means that there's going to be more formality and more things that organizations need to certify to. There's something we come on to a bit later specific to colleges and SPIs. And then what we're seeing still in the cybersecurity kind of world is that the most effective form of a technical control that can be put in place is multi-factor authentication. So that's using another form of authentication in order to access your systems or your data, so that if any credentials were compromised, whether that be a username, login details, password, etc., they still need access to another token or a device or another registered device in order to access that account. And so they need access to two things or multiple things in order to breach and access your data. We're seeing that as probably one of the most effective forms of defense. So coming on to the next information, and now we're looking more at the education sector. I think those numbers really speak for themselves, and it's actually quite concerning from my perspective. What these statistics show me is that the education sector is actually a targeted sector in industry. Now, why would that be? Well, I think the reality is that if we look at all public funded or generally public funded organizations, they have less budget to allocate, and therefore are probably have less budget to allocate to cyber and to security and to maintaining their IT estate. And therefore, in that scenario, they are an easier target. And so that's what these numbers are telling us. And for broader awareness, all of these bullet points are pulled straight out of the cyber breach survey for 2023-2024, which is a government survey which is readily available online on gov.com or gov.co.uk. I think so you've got those, those top 3 bullet points looking at the percentages against certain education institutions or schools, primary schools, etc. Now, there's some fantastic guidance on the NCSC, which is the National Cybersecurity Centre website. And included within that are the 10 steps to cybersecurity. Now, what the breaches survey showed is that there are a number of organizations, especially in the education sector, that actually don't have an awareness of these 10 steps to cybersecurity. And this is actually a great place to start if you're not sure where to start, or even if you've got good foundations in place, it allows you or enables you to start thinking about the next thing. Again, all about protecting your organization and its data, its staff, its pupils, everything. Also, there's a lack of awareness around Cyber Essentials, which is a specific certification standard, and we've got a slide on that later, which we'll come to. What the breaches survey was also identifying was that there's a lack of sufficient involvement and oversight for cybersecurity, but also a lack of sufficient knowledge around cybersecurity of senior individuals within an organization. So whether that be directors, trustees, governors. And I think that helps to inform some of those statistics as well, because actually, if you have a lack of knowledge in a particular area, there's an element of naivety there around whether you're doing enough, and actually having a specialist to come in and independently tell you whether you've actually got sufficient controls and measures in place is actually really valuable. You wouldn't run a business without someone with some financial kind of credentials, and therefore able to comment on those financial credentials. Yet actually we've got people commenting on cyber that don't necessarily have any cyber credentials or experience. So it's actually really important to involve the right people at the right level. So then we've got some education sector sort of cyber attacks, and these are the ones that was able to pull out that are readily available from sort of news articles. And dare I say, there will be a lot more that are just not publicized. But these are the ones that really jumped out at me. And if I take the 5th bullet point there, where you've got the University of West Scotland, confidential data sold for 450k. So this actually shows the value of the data that organizations hold and the value of it to the dark web, to malicious actors, to cyber criminals. And so all they've got to do is access your data, and then they're selling it on and they're getting a profit from it. Whether you like it or not, that data is now out there. And actually, that data could be personal information about yourself, about your pupils. It could be really confidential data as well. So it could even contain, say, medical information. If I think of a particular school that I was talking to, actually up in London, it was a private school, and they were looking to go through a Cyber Essentials assessment. And they were talking about that they're a very specialist school. They have pupils with very specialist needs, and therefore the data they hold on those pupils is very confidential. Therefore, they were wanting to take precautionary measures and certify to a Cyber Essentials standard to help ensure that they were taking the right steps to secure their organization. I think there are a couple other things is that actually, if you take that St. Augustine Academy, it's not just pupil data that's being leaked, it's actually parental data. So then actually it's the data that you're holding on other people as well. And what the impact that could have, there's a trust that is possibly being broken between yourself and others. And actually that has a reputational impact on the organization as well. So if we come to the next slide, we've got talking about sort of the risks relevant to your organizations. Now, Stephanie did a fantastic section there on risk registers, and I can't speak more highly enough for risk registers and how important they are, and actually including IT risk and cyber risk within those risk registers. And it's really important that those risk registers are formalized, and you get to a point of, say, risk acceptance, risk tolerance. And if you're not in that scenario of where you're wanting to accept that risk, you're then looking to implement sufficient controls later on or in response to the risks that are being identified. Then you've got accountability and responsibility. So actually having someone with time, and time is probably the most important thing, but time and money to allocate to cyber, actually that encourages a bullet allocation. It encourages project delivery, and actually for steps and incremental steps to be made. I think what we're seeing is across our client base, we're not seeing organizations allocate tens of thousands of pounds more to cyber, but actually we're seeing them allocate incrementally more in response to a changing landscape and an evolving technology world. And thinking back to some of those particular school breaches that we were looking at there, one of them was an article around students not able to actually learn because systems were down. If I remember when I was in school, it was pens and paper and that was it. We were lucky to have some computers to use. It was you had a separate IT room, but now everyone only learns off of IT. They learn off of iPads, they learn off of laptops, they learn off of other devices. Now, if they can't access those devices, they can't access the learning material. And if they're learning, say, remotely, it's just not going to happen. So there are also knock-on impacts from an operational and quality perspective for the pupils. It's really important that there's cyber security awareness training, and that goes for staff as well as pupils. And the reality is that human error is the biggest reason for cybersecurity attacks and breaches. And therefore, people are the weakest link, but at the same time, we want them to be the strongest link. So it's really important that actually we need to train people sufficiently and on a regular basis, or at least a periodic basis, so it's not too overwhelming. It's very common in this industry for there to be outsourcing of IT support and IT security support to third-party IT companies. Now, a conversation that I've had time and time again with organizations is that they think they're getting some form of IT security support from that third party, when in reality, they're just getting IT support. Now, if I were to kind of do that in a metaphor type way, what the service they're actually getting is the third party company just making sure the lights stay on, that things are running, compared to actually they're making sure the doors and windows are consistently locked and or being updated so that there's no reality of a breach or otherwise. Now, it's really important to understand that relationship and that contractual agreement with the third party, because you don't want to be in a scenario where you think you're getting something when you're actually not. And this goes back to, again, having the right level of knowledge at a senior level in the organization to be able to challenge that third party and understand what they're doing on your behalf, rather than it just being blind trust that they're doing everything they should. It's really important to have technical controls in place and that help manage and safeguard your data. There's a nice slide we'll come on to later, which goes into that in a bit more detail. And then lastly, it's really important that you're able to get your systems back up and running as soon as possible, especially in the case of a cyber attack or breach. So coming on to Cyber Essentials, this is a certification standard that the government put in place. It came into being in 2014, roll on 10 years now, and it's evolved in quite a nice way. Going back to 2014, it came into play because the government wanted to say that anyone touching our data or providing systems that's going to manage our data, we want to know that they're certifying to a baseline level of security. Roll to the present where we are now, actually it's seen as an industry baseline standard for SMEs, so small, medium-sized enterprises, and there's now a governing body in place called IASME, which stands for Information Assurance for Small to Medium-Sized Enterprises. So this is a standard that has evolved over time to actually be more accessible for organizations more generally across multiple industries, but then also actually a good mechanism to evidence to customers, suppliers, vendors, stakeholders, whomever your kind of customer may be, so in this case, possibly pupils, to show that actually you take cybersecurity seriously. What it can also do is drive down insurance premiums. So if you have some cyber insurance, a cyber insurance policy, what you can this will help is actually it will help drive down that premium, because it's a recognized certification and standard to say that you have X, Y, and Z in place. If you look at insurance policies and premiums, they've gone up since COVID, and the level of compliance that's required, or the baseline level of security that is required of an organization, has equally increased. And the more controls that you have in place around IT security, the lower your premium will be, because you'll be a less risky organization, or at least perceived to be. I've already mentioned who Cyber Essentials is kind of relevant for, and that's basically all organizations, but specifically colleges and SPIs. That's becoming a requirement now. I believe within by 2025, I think all colleges and SPIs need to certify to Cyber Essentials. So you have Cyber Essentials, which is kind of two standards to it. You have Cyber Essentials and Cyber Essentials Plus. Now, it's all the same standard and questions. Cyber Essentials is a self-assessment. The Cyber Essentials Plus is an audited assessment by a third party, a certifying body. And PKF Francis Clark, we are a certifying body who can actually certify organizations to that standard. And that would be the self-assessment and or the Plus, the audited assessment. We'd love to obviously have a conversation with you if you're interested in that. So then, kind of key takeaways from this session from me is that cyber naivety is actually kind of counterproductive to an organization's ability to protect itself, its staff, its pupils. So that's going back to the cyber breaches survey and looking to get the right level of expertise involved at the right level in the organization, having some dedicated person who is accountable and responsible for cybersecurity, because that will help drive change and culture and mindset changes within the organization. It's really good to seek independent insight, some form of assurance. Now, we've had mentioned that internal audits for larger academies. We are able to do, obviously, internal audit services, specifically with respect to IT controls and cyber controls. So we are able to help with those types of things, but also it's looking to get the right level of involvement of an external specialist so that it helps you continually improve. If we look at most cybersecurity awareness trainings that are out there are some fantastic offerings that people possibly don't use or are not aware of, and therefore it's older stuff that gets recycled and reused. It's quite good if you can keep that fresh and refresh it so that actually you keep the end user interested, interactive with the material, and keep things going from there. I've already mentioned where Cyber Essentials is now required for colleges and SPIs, and what we can do after this session is provide some useful links and materials for schools, colleges, and SPIs, because within I think it was the ESFA bulletin, it actually had some really useful links that tie through to the National Cybersecurity Centre, and it links into the 10 steps for cybersecurity as well. So that's some really helpful information for any of you. Just to say broadly, obviously we certify organizations to Cyber Essentials and Cyber Essentials Plus. We perform a broader range of services than that. And if you ever wanted a conversation, an initial conversation to talk about what you're doing, where you're looking to go, and what you're looking to achieve, be very happy to do that. And as it says on the slide, it's a free conversation. So I think at this point, thank you, but I'm also going to hand back to Louise because we might have a question or two that have come through.
Thanks, Phil. That's great. Yes, we do have a couple of questions. So the first one was in respect of Darren's session. So the question was, the addition to be made by the Audit and Risk Committee on the 3 areas, surely this statement should be included in the internal auditor's annual report to the trustees. Darren, I don't know if you can pick that one up for me, please.
Yes, by all means. So yes, that was coming back to my point this year that in the governance statement, the board now needs to give a conclusion that the Academy Trust has an adequate and effective framework for governance, risk management and control. And ultimately, that is the Board of Trustees' conclusion, because they are the ones with ultimate responsibility for ensuring that there is an appropriate system in place. Now, clearly, a key part of that system will be appointing an independent auditor, and they're going to report to the Audit and Risk Committee on the work that you've asked them to look at. Now, if they come back and say, they found a particular weakness in a certain area, that might be something that then the board wants to refer to in this conclusion. But the board needs to report back from an overall perspective, looking at everything, obviously your internal auditor is only going to comment on what you've engaged them to do. So this is kind of a higher level conclusion, taking into account what your independent auditors fed back to you. I think you're on mute, Louise.
I nearly got through a whole webinar without doing that. Thank you. Phil, I think this is just a quick one for you. So in relation to your risks relevant slide, what about the KCSIS read pupils accessing inappropriate sites, filtering in pupil searches?
Yeah, so I was trying to keep the risks at a high level where possible, and dare I say, sort of more organization specific. If you want to get more granular, then yes, that is exactly a risk that exists, and there are ways in which you can sort of put controls in place to define which sites are accessible to certain individuals to try and safeguard against those things. So whilst that slide was there saying sort of some relevant risks, it definitely wasn't an exhaustive list, but there are many further risks that could and would exist, that again, some of the technical controls against some of the standards that we were mentioning about can help to address some of those things.
Thank you. I also just wanted to pick up a point that somebody raised in the Q&A, and I think it was mainly in relation to Stephanie's session on the risk registers, but could be relevant to all of us. So where we use the term governors, somebody pointed out that that really refers to local governing bodies, and actually we should be referring to trustees or directors when we're talking about the main board. Actually, we're using the term governors here just so that we didn't have to kind of interchange, but basically the reference to governors refers to the board level. So rather than using different terminology, I know some trustees still refer to them as themselves as governors, etc., but that's the level at which we're talking about. So apologies if that caused any confusion, but it's basically the board level that we're referring to. So I think that's it for today. Thank you. I just want to thank all of our speakers. Been really worthwhile. I think we've had a really useful mix of technical updates as well as really practical sessions, and hopefully you've all got something that you can take away from today. And as I said earlier, please come back to us on anything. If you want to have that free conversation with Phil and his team, then by all means either contact him directly, and his details as well as all of our details will be going out with the slides and the recording. But please talk to your audit teams. There will be things I'm sure that come up that you suddenly think, oh, actually they mentioned something about that on the webinar. You know where we are. And just want to thank you again for attending, and also please feel free to circulate this. I know obviously you're all very busy, it's a really busy time in your trusts. Please feel free to circulate the presentation. It might be that other members of the board or other members of the executive team would find it really useful to watch. Thank you very much for your time, and we'll look forward to seeing you in the new Academy season, which is coming up.